That's it. Let's go.
Hi, everyone. Look at that. She did it. I'm so happy with myself. I can't even tell you. Let's welcome.
Look at you.
Yes, let's welcome Mohammed.
Look at you. Expert.
And
YouTube expert.
an old dog can learn new tricks. That's what we know. That's what we know. So, have you, since today is a work day for you, what have you seen your markets doing today?
Our market usually on Sunday is preemptive. Either if there is a big move on Friday, so on Sunday it's a catch-up market, or if there is no movement on major movement on Friday on the weekend, so it will be just flat market. So today I see our market is flat. Nothing changed from Friday, so I don't expect there will be a big gap on the US market. I hear some echo.
Yeah, I hear a little echo too. I'm trying to figure out
Yeah,
how.
it's gone. It's gone.
Okay, it's gone.
It's gone.
All right, fantastic. Fantastic. So, would you like to start with what you are seeing in the charts that you like to play and what you'll be watching, and then I'll just jump in. I think we've got some news that might have us gap down today because of there was a little bit of a tariff news that came up over the weekend. Something they called it a salvo because he said this weekend the 30% rate for the European Union and Mexico is effective on August the 1st. And yeah, what are you seeing?
I think I see that is already priced in on the market on Friday, late Friday. As you can see, the last hour of the market was so bearish. The market sell off strongly in the last hour. If you can see, last 3 hours of the market was sell off. It's like was expected move, and I see it is already priced in.
Okay, do you normally trade the I know we were talking backstage, you said you don't normally trade the NQ this time of day, but are you seeing anything in the NQ specifically? Okay. Everyone is saying that, yeah, they either can't hear you or it's an echo when it comes. So, yeah. Um, oh yeah, I hear you fine. So let me turn down. Okay, start talking again. Yeah, no, I can definitely hear you. No, yes. Yes. Yes, we're both wearing headphones, folks, so sorry. All right. No, I heard you. Wow. I mean, I can hear you just fine.
Mm,
Um, okay, try now.
okay. How
Yeah,
about now?
that,
Now?
yeah, that's super weird. So, daggone it.
Yeah, they said yes.
Yes? Oh,
Yeah.
okay, great. Great, great.
No echo?
Yeah, I still hear a little echo, but that's all right. We are getting ready to start. It looks like the market opened up on us, did it? Yes? Oh, we were
Not
looking at
yet.
not yet.
5 seconds.
Oh yeah, 5 seconds. Here we go. All right, so
Oops. I've been opening, gapping down.
yeah, I figured we would have a gap down because of this big piece of tariff news.
Mhm.
So let me get my chart squared away, and then take I will show them instead. So let's do my chart. Um, Oops, you know what? I can just leave it down here and then go like this. Perfect. Okay, so this is super interesting. If if this holds here, I think this is a pretty solid buy. So here's why. For about 6 or 7 trading days, we have been dancing around 62.72. I'm going to take a long there.
I was talking about ES.
Yes, I'm going to take a long there. And here's why. Now this chart should bounce back off of the low edge. I'm going to give it a little bit of room to dance around here, but this is a super important number. For it to lose this number at 62.72 and stay below there, it tells us that the market's going to have a pretty solid flush. It looks like it's doing it right now. However, here is the last place we had inventory accumulation from days past, and we're holding the base of that inventory accumulation down in this edge right here. What do I mean by
Mhm.
inventory accumulation? Just price action, trying to hold the top of the range. And so my thought would be there would be a sell stop at 64. So I'm going to reverse the direction if it loses this edge. But my thought is that it should hold this area of inventory accumulation in the near term. And then if we can't get up above the opening tick high, then we've got ourselves further downside. It looks pretty weak. I feel like I jumped the gun here, but this motion definitely is saying, hey, listen, the buyers have tried to hold in this range a fair bit. If they don't, they're going to flush through the bottom and then try and catch this area here. So I'm going to put a limit at 62.61. But I do believe we're going to recover this 62.72. There we go. We're going to try and recover it and then move into this big moving average that I have here, which is the 200 on the 1 hour time frame.
If you switch to my chart, the ES on the weekly has 1, 2 levels. The lower level 6,246, and the open of last week 6,285.
Yeah. So what do you think about that 6,285? That would be a great place for this chart to go if it can recover. I just don't know that it can. That's my thought. So
For me, I will look for a buy at 6,246.
oh, you'd want to see it go all the way down there, 6,246. That also happens to be, oh, and I got out. It went right up to my target at 175 and covered. Now, let's talk about why I chose that level. These are the market kickoff levels, and JD was awesome to get them up in time. We have yesterday's low, excuse me, the prior trading day's low. That's where I had my target. I used the expected weekly move as the first support bounce. That's why I went long there. I think it actually would still make another nice long, but I want to see it do a little bit more, a little bit better recovery. Right now it has no structure. It's just this great big candlestick where the dip got bought. And so right now, what I'd like to see over the next little bit, I'd like to see us bounce off of this zone, break the high, and then pull back and give us another higher low, and that would build some structure. So what this formation tells me right now is that I'm in danger of losing this weekly expected move, and that's going to give us quite a flush if that happens. So what I wanted to tell everyone for the week, here are the levels. 63.50 to the upside, 62.72 to the downside. We are already at the base of the expected move. So buyers are really going to try and defend this area. If they can't do it, it's going to turn into selling pressure. And so let me bring my chart back here so I can show you the weekly kickoff levels. Here is the 62.75, 62.76. That was my target for the long of 62.72. So only 4 or 5 points, 4 points or so, but a nice opening trade in the easy space that took us right into that Friday's low. And now we've got all of this chatter that's likely to hold here. Again, JD put up those expected move, the top step levels up for us, in due time. And of course, I do want to issue my apologies to everyone for being late. I'm still trying to work this out. And then I got chatty with Mo, and of course he's such a gentleman, he just started answering all my questions. And so, and then I looked up and went, oh heavens, we should be live. So my apologies, getting the hang of this still. Here's what I want to share with us before we go to the next chart. Over the last, let's see, what day is this? June 27th. Since June 27th, we had this accumulation area. We broke out, pulled back, came into the accumulation area, and then bounced out again. So this big fat range is what we are arguing with. And this number at 62.72, you're going to have to watch it. It is very, very important for motion. And if you stare down this chart, easily, if we use our creative eyes, we can see that the potential for a megaphone exists, right? In terms of higher highs and lower lows coming off of these edges. So you want to be careful hanging on to trades thinking that they're going to run like the wind in one direction or another. We clearly could have very choppy flow. Very, very choppy flow. Let's take a look at the NQ. All right, NQ's expected move below that area, but I've done the same thing. I've drawn the pocket of inventory accumulation for us to stare down, and wouldn't you know it, here is our, let's see what number that is. That's last week's low in the Topstep levels, and it's just shy of that coming into the area and bouncing, but still dancing around a very important area where it looks like a lot of sellers showed up here. So the line in the sand could be something as simple as this. One, you want to try to do this with micros, not with the regular NQs. But when you come into this area where you see all the inventory trying to hold, you could do yourself a short trade, not a short trade, a buy stop that runs the stops up over the edges for a quick snap trade back into the heavy congestion. What I've done is put an anchored VWAP on the highest volume candle of the last 3 days. And so that puts that area up here. It shows most everybody as selling pressure. My thought would be let it collapse, see if it gets down into last week's low, and then try the quick snap trade for 10, 20 points. Yeah, 10, 20 points, and clear off the top, because a long would be very, very counter trend. The ranges are really wide for the expected move, so they're calling for a lot of really wide things. Mo, do you trade Bitcoin at all?
No, I
Okay.
never tried it. I like to trade something that I know its behavior, um, and I don't understand Bitcoin at all.
Okay, all of a sudden you turned into a really, I have to turn Mo up. All right, let's turn him up. Okay. Um, and then let's see what else is going on here. Yeah. Hopefully that does. It looked like a double echo. Um, yeah. All right. So, let's take a look at Bitcoin. This is super interesting. It's really rallied. There's a very big line at 120,000 for those of us that trade Bitcoin. This is like 20,100. That's a pretty big number. It's been, look at the range this thing's been sitting in. Right? It had a big base. This is very thin volume up here. So my thought is they're going to try and build a volume profile here up above that breakout level of 115,000. So that's my thought from that perspective. So let's talk next about oil. And then we'll work through some things. I think oil is at the top of the range. You mostly just trade the
Oil.
ES or the NQ. Yeah.
Yeah.
Okay. So here's my thought here. I am going to put a stop buy at $69.02. Let me see if that's enough. No, I need to make it 69.09. Yeah. And if this is a bottoming, if this is the top of the range, I could do a market sell here. I'm going to delete this and then I'll turn it around and make it a market stop buy to reverse direction. And what I'm expecting is this topping formation here, simply because one, we have the tariff information. It's going to make everybody all hot and bothered and very likely to pull oil in just a little bit. And it's sitting in this big fat range. Last time it was here, the momentum is pretty strong. So this one is going to be interesting to watch. We'll keep an eye on this one. But this one is short, and it's short at 68.72. Yeah. So we'll see. It'll turn around long. I've given myself about 30 ticks of risk from this space. And if it holds, it'll come down. I'll get about 60 ticks to the downside. Could be bearish, could be bullish. I suspect that the news here is going to bring us down into frontline support. So let's go back to your charts, Mo. I got a couple questions for you. Here we are. So when you say, hey, listen, I don't like to trade this time of day, talk to us a little bit about what makes you most comfortable about setups and where you like to look for market formations that give you a level of confidence about what you want to do.
I am daily trader, so I use the information that I receive today to make my decisions. I don't trade this time of day because I don't have that information. The information is developing. As developed, I can easily make calculated risk decision. In addition, this time of day is not convenient for me. It's 1:15 a.m. now here.
Holy
So
smoke.
usually I should be sleeping now.
Thank
So
you
I
so
don't try
much
this
for
time of
being
day.
here.
Yeah, of course. But whenever I wake up, I see those information. Structure is built, pattern is formed. Then I can make a decision based of it. Friday information is not useful for me. People who's trading Friday are different than the people that trading this week. So I cannot take their behavior to base my decision on today.
That makes sense. So is that because you've noticed that in the past, or is it?
My backtesting what wasn't using today's information. I mean this time information.
I tend to use as much information as I possibly can as for as many candlesticks as I can. So, but I am not a speed trader like you. I literally watch you guys with awe moving through your spaces so quickly, your quick time frames and your tick charts. I don't have that. I'm not good at that. And so I tend to look at all of the candlesticks that I possibly can to think about that. So what you actually look for is how the new traders are coming in and behaving for the day.
Come again?
You are coming into each day looking at how the traders are individually behaving that day, not relative to past days.
Of course.
Okay.
So let's take ES last Friday. I usually come at the open, say 8:30 at this time. Okay, so I don't know what is going on past this time. So I have all this information from today. The market is telling me this is 2000 tick chart that we are bearish for the day. I have this information today. Those people still in the market. Okay, so now I will start looking for a sell opportunity if it comes until the open. We have some push there, so I will take this drop down. I will get benefit of it. Then I will stop buying as the buyers are taking control.
And the way you weigh that is by them breaching over that yellow moving average, or
No, no. This yellow moving average is the 50
okay,
EMA,
okay,
just telling me that we are heading down. We're
okay,
still heading down,
okay,
heading down. Now it's not heading down anymore. So
okay,
stop selling.
gotcha.
Should I buy? Yes, as long as we have the buyers having control. We have this intersection between the 21 EMA and the smoothen line. So now I will look for this pullback. I will buy here.
Okay,
I will also buy here, even if it's a loser, but it's a good loss.
gotcha.
You can see.
Yeah. I actually was just going to ask you that question. What would you do if you got a signal that put you in a direction and then you got stopped out, which I do notice that you're very good about just really managing your risk super well. And I think that that's what a lot of traders really struggle with. If, a lot of folks say, hey, I feel like I'm spinning my wheels. I feel like the market I feel like I know what I'm doing, but then I can't seem to get up over that hump. And what I see happening with traders a lot is something called scope creep, or a shift in decision making that's very subtle. And so, what we have a tendency to do is we start on a trade and we go, okay, that's what I need to do. We get into the trade, we get stopped out, and the next trade we completely change and we go, okay, well, this time I need to do this, instead of realizing that nothing happens 100% of the time, that you keep your risk clearly defined, and then you go back to the drawing board and say, hey, I decided that this was my setup. Was the risk too wide, or was the risk too tight? And will the same setup work, or has direction changed? And what I notice when I watch you trade is that everything's very systematic. You're always really just moving through the process every single time. And for those folks that really are saying, hey, I've really been trying and I can't seem to get myself up and moving, then, it could be just taking a step back. If, you know, here's the thing, if I could talk to one of the traders who put a note in there, and Andrew, thank you so much for being here. I really appreciate you being here with us. And someone says, hey, I don't really think I know what I'm doing, honestly, and I should probably quit. I really need to focus on initial fair value gap strategy. Is that what that means? I just put a bunch of words in that look like it had those letters starting. I have no idea actually. And so here's the thing. And let me take my charts back and we'll have a peek at this. So let's see. All right. So let's just take a look at this. This chart is, lollygagging around my entry point, but nothing's really saying that it's the wrong trade at this juncture, right? I'm trading a reversal formation because I see a test here and a reversal, a test here and a reversal, a test here and a reversal. And so I'm going to say recent past is going to give me near term, present, future, right? On top of that, I've got a little bit of a megaphone building like this, but notice how different. I think it's fascinating to see how different people trade. And I'm going to remove all these indicators. All we're going to look at is price. And the one thing I try to talk to folks about over and over and over again is if you are, let me move this out, that's an anchored VWAP. If you're looking at price, doesn't matter if it's a 5-minute, 15-minute, 1-minute, 3-minute, whatever, traders in the market are in the market, of course, to make money, but the market exists to facilitate trade. We hear Hope talk about that all the time. So what does that mean? It means if people accumulate inventory, like here they are buying in here. They're not selling below here, right? Because there's no candlesticks there. They're not buying above here. There are no candlesticks there. At some point, that's going to break. And when it breaks, all the people that have been collecting inventory here are going to distribute at a profit. So you can trade a couple of different ways. You could look at this range and then say, you know what? I see this range. It just broke out. I'm going to put an order that allows me to buy the base of this. The second thing you could do is while it's building its edge, you could say, hey, I'm going to put a stop buy if it's sitting underneath here, because if it breaks out, the first place it's going to go is to the last area of congestion. We can see that. I'm frozen. Do you hear me?
I can hear you cutting off.
Yeah, my internet's been just the pits lately. It's so annoying. So anyways, we've got inventory accumulation and distribution. Now, here's what we're doing. We've got inventory accumulating 3 hours. They break out, they come all the way back to the base. That's the risk of trading the candlestick that opens up at the top of inventory accumulation. It comes all the way back down to the bottom of inventory accumulation. To me, that seems to be where my stop ought to be, my target anyway, $68.31 from that perspective. So if you're saying to yourself, man, I don't know what I'm doing, listen, go to your practice account and just trade old resistance is new support. I'm going to buy my new support. My test is going to be old support. If I can't handle the risk, I'll wait for another setup or I'll trade a micro. But just trade those boxes, folks. Just make it easy on yourself and learn to trade the boxes. And when your eyeballs see these inventory accumulation spaces and then breakouts, you can make beautiful trades for upside pressure events or downside pressure events without having to stare down anything else, honestly. And that's really the number one thing that I would want to share with you. If you feel like you're not getting it, slow down, size down, step back, and say, what's the easiest thing I can do to trade? Resistance equals support, new support, old resistance, new support. And just rinse, wash, repeat over and over and over again. You're going to build a lot of strength.
Yeah. If you allow me also, Amir, the easiest way to learn this market is to start with market structure. Market structure. What I mean by market structure is easy. Look at this chart, whatever the chart, whatever time frame.
All right,
Okay.
let me get.
You can see the market made a low after making this high. So this is market structure, making high and low. Now the market is moving up. Most probably it won't to visit that high. Okay, maybe you are not long here. Market is bearish. You don't want to pick a low. You wait, market break. Then after market breaks, look at what happened. Retest the market structure. Now look, I removed all indicators. Nothing, just market candles. You can buy here with a tight stop. Why tight stop here? Because you assume the market should make higher high. If the market comes back inside, that means you are wrong. If you are wrong, exit with a minimum loss. So the market continues. They did it again. That was market structure. That was a retest. In this one, they didn't do it. They didn't go down to this area. Fine. Wait for the market to break that structure. Look how many times they try and then they go. Now we are testing market structure again. It could make a new high. The market will continue doing what it's doing until it's proving otherwise. What is otherwise? Is going to the low structure. Now we could have a reverse. This is simple without using any indicator. So market structure is the base stone that you build your technical analysis upon.
That's a great explanation. Absolutely love it. Absolutely love it. Really, really great.
So you can take profit immediately.
Yeah, folks,
We are really seeing the market structure.
here's the thing. Trading is simple, but it's not easy. And that's always a hard thing to think about. It's simple, but it's not easy. And so what that actually means is what we do is just move in a very simplistic fashion. We get to a top. Last time everybody sold, hey, let's give it a go. Let's see if everybody sells this time, right? And so that clearly is something that we should think about in general, right? Recent past equals very likely to be near-term future. But what Mo just described in the charts is the same sort of thing I look at. He's just framed it in a different way, but it's all the same. Where did buyers take over and create new support? Where did sellers come in and stop the train? Where did buyers break out and push sellers out of the way and create new highs? All of that is simple motion from support and resistance and support and resistance. And so one of the things that, of course, we'll be covering when we get to our VIPs is really going through these very simple structures without making things overly complicated, because one, we second guess ourselves because we think we should be perfect, and that's just not possible. You can't be perfect in the market. You have to be a good loser, and that means, can I manage my risk? And some of us are great at holding on for great big long trades, but most of us are just looking for the short trades that build our confidence in our ability to see what the market looks like. And some of us just have way too many indicators on our charts without understanding, here's what price is telling us that the traders are doing. So, yeah, is that the oil chart?
Yep.
Oh, so oil short looking pretty good. Let's go back here and see. Yeah. So I moved the stop down a little because, easily could go into here and it could move all the way down, but I'm here to manage risk. And I do want to actively take trades in market kickoff. So you can see that the trades are there to take. Normally, I like to wait for an hour for the markets to set up. But since we're offline in an hour and Coach Dakota is going to take the helm, I just wanted to tighten things up a little bit and use the last day structure to build those particular trades. So we'll see how it goes. If not, I'm out with 16 ticks. If I get all of it and it comes in, my target I'll get 40 ticks, and Bob's your uncle. We'll see how it goes from there. I do want to look at Bitcoin for us. And then I want to remind everyone tomorrow that they need to be very careful with size. It's going to be very tariff noisy. There are going to be a lot of talking heads floating around saying all kinds of stuff. And we just need to be super careful. Now, Bitcoin is on a run. It's going crazy. All the Bitcoin tourists are out just buying up all they can of Bitcoin to chase it into the next space. And so really, I suspect we need to come into this 115,000. And because there's a volume profile that's very, very thin there, I would not be opposed to leaving an overnight trade on at the limit near 113,000, and then maybe 114,000 there. The risk is small, tight, give you a lot of room to run, but I expect it, if it fades, I expect it to come back into the range. I think that's really, really important, that this chart, I think it builds another structural piece of noise. I definitely would not want to chase it to the upside. Does anybody have any charts?
Order filled.
Oh, there it is. It stopped me out. Okay. So thank you, Danielle, for coming in. Okay, does anybody have any questions or anything about prices or charts that Mohammed or I can answer for you? And I thank you, Dr. Curmudgeon. I'm always excited to get on with Mo. We trade very differently. I learn from him a lot. I learn, one of my favorite things I learn from him is how he looks at those candlesticks that come in with those big pieces of buying volume when he decides to go long, or big pieces of selling volume when he decides to go short on those structural motions that he watches. That's really forced me to pay attention to watch how candlesticks go. I look at them on bigger time frames, but I still use the technique. So I'm always excited to get to spend time with him and talk about those things.
We forgot to talk about gold.
Yes, let's look at gold.
Gold looks bullish.
Yep.
They break the last structure.
Yep.
We just want to look at structure. We have this structure high on the daily and this structure low. And the market since then, it is going higher and lower within this high and low. So inside this one, we have a higher high and then lower low. So we broke the structure, and now we are breaking the recent structure here. So let's see if the market retests this one, it can continue from there.
All right, I like that. Let's see what we could do if we stare it down on a daily chart. So I will go to the gold daily. And what we can see is a lot of chop. The expected move on the week, 3,423 on the upside, 3,300 on the downside. And so that's a pretty big range, right? That's like $1,000. And so 3,300, 3,400. No, yeah. It's $100. It's a ton more if you're trading the charts, because it's $10 per tick. Okay, so there's a lot of money here, but notice how difficult trading is if you are a daily trader and you're looking at long-term formations in gold. It is very noisy. For instance, if I move it to a monthly candlestick, this tells you how noisy this chart is. Take a look. This month, whatever month that is, so this July, June, May, April. All of the price action that we are staring down right here is in the month of June. In the month of May. So this chart literally has gone nowhere since April. Since the breakout of April at $3,179, it's gone nowhere. It's moving very sideways. So what this should tell you as a trader is I need to look at the edges for moves. And if it's not at the edges, I don't want to take these trades. And so for now, the edges are at that 3,300 to 3,478. All the way up here. Could we move all the way back up? Yes. Is gold going to continue to go higher? I do believe it is. Why? Because every government on earth is spending their fiat currencies to the moon. And if we've got nothing backing our paper money, except a bunch of debt, gold is a physical commodity and it's going to continue to rise. So deep dips, going to be buy zones. The price action has a lot of upside on it. Would I want to take a long here in gold and go to bed? No, I would not. Simply because the market action is way too sideways. I would much rather wait for a dip into, I don't know, maybe I'll leave this one here, 3,318. And if it pulls back, yeah, you know what? That's $70 down. But we've seen those kinds of moves, and we're sitting in this nasty box. If we run up all the way, we could go all the way to $3,410 before we stop. But I don't want to buy this until it comes back and retests the area. Now, maybe I'd like to see the breakout long. I think I'll put a buy here at 3,373 also. But yes, dips are going to be buy zones. The chart should have a little bit of fade, but central banks continue to buy them up. Continue to buy them up. All right. Any other thoughts?
There is a new nice question. How do you try to avoid choppy markets? Should I answer this?
Yes, please. I would love that.
I use my moving averages to tell me whether the market is in chop or not. So let's look at the most difficult market, which is NQ, which shows a lot of choppy market. And I will go to the 1,000 or 2,000 tick chart. I use the moving averages. Okay. Use 21 moving average. Remove this one. All of them are 21 moving average. Okay. This is the high of the last 21 candles. This is the close of the last 21 candles, and the lower one is the low of the last 21 candles. The blue one is the smoothing line of the close. How to make it? It's very easy. Double click. There is an EMA 21, and make sure that you have the smoothing line EMA at 21. And check on smoothing MA. So now you have the close and the smoothing line. For the high, simply it is 21, except instead of source to be close, I make it high, and the lower one, you guessed it, the source is low. Now, how I use this? I use this to achieve two major goals. Number one, is the market in chop or not? Because the most dangerous thing for anyone using moving averages to make decisions if the market is not trending, because moving average works if the market is trending. If the market is not trending and you are buying using moving averages, you will be totally screwed. So I need to know if the market is in trending or is the market is in chop. So how do I know that? If the smoothing line is outside, I call it the Bollinger of moving averages, outside, like this one, it is outside. Now the market is trending. If the market is inside, wait. The market might be in chop, and here we go. It is in chop, staying in chop, staying in chop. All this is in chop. Once the market leaves, once the smoothing line leaves the moving average, now I can say now it is trending down because it is higher than. So this is how one way to avoid chop. If the smoothing line is inside the moving averages, like in here, for example, this one, market is inside, is never leaving, so that means we are in chop. So basically the smoothing line, if it is trending, that means the market is trending. If the smoothing line is flattening, that we are in a chop. What's your stop loss? Your stop loss is a target in this case. So that's short answer for your question.
So I have an alternate view about what markets look like when they're choppy. And so let's...
Maria, are you here?
No, you can't hear me? I'm gone? No audio?
Hello?
Oh my word. Okay, can you hear me now?
Yes.
Okay,
Yes.
good heavens. All right, so let me show you my charts and we'll answer this and then we'll say goodbye to everyone and get ready for Dakota. So my thought about what markets look like when they're choppy, super simple. Let's go to something that is choppy right now, but wasn't. So we know what happened to copper. If you didn't, there's an announcement for, a monstrous copper tariff, but we don't have the day that it's going to go in force. It's just going to go in force. So here's what a market looks like when it's choppy. If you're saying, I'm trading the hourly chart, you're like, oh man, I want to trade. So a trending market is going to have lower highs and lower lows. When a market stops trending, let's say right here in this patch, what happens is it stops making lower highs and it stops making lower lows. So right in that pocket on the hourly chart, you're going to see that the price action is presenting a choppy market. A choppy market is defined by candlesticks that retrace each other. So all you have to do is look at the candlesticks and say, wait a second, am I making higher highs and higher lows? Or am I making lower highs and lower lows? Then I'm trending. Otherwise, I'm choppy. So you might go, all right, well, what if it does something like this and it's making lower lows and lower highs, and then all of a sudden it bounces out and then it pulls back? That's choppy, right? So when you say, hey, how do I know how to stay out of choppy markets? You have to decide first, what time frame are you trading? And then pull in as much data on that time frame that you can see. And then just use your eyeballs and go, okay, what does that look like it's doing? Well, it looked like it was moving down here, and then it looked like it was moving sideways here, and now it's gone crazy up here, and now it's sideways again. But inside of these sideways patches, you got to zoom out to look at them. You can easily say, okay, that's old resistance. Draw yourself a box. Here's old resistance off this ledge. And traders, they are going all the way up to here. Breaking out a little bit, but coming back in. It's a very noisy chart. But here's what you can see, literally. When a chart is chopping sideways, 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 and then it loses the edge, like it did right here, it's either going to bounce up for a bit and then continue down, or bounce up and try to retrace back in the noisy space, right? This whole edge is noisy. But if you look across this zone and you look here on the breakdown, you can easily go, wait a second. This is called, very, very customary, this is called a look above and fail. That means it looks above support, that old support edge, and it comes back. So in your mind, you can go, okay, this is failing. I see it across this edge. I'm going to take the short here. My stop is going to have to be up here at this last area of support, but I'm going to take it short and I'm going to walk it down. I'm going to take some profit here because I had support here. If it comes back up, I can take another short and I can walk it down, because now all of a sudden you're seeing high, low, lower high, lower low, lower high, lower low, lower high, lower low, and it's slipped into trend. But literally every single box of 15-minute formations you can eyeball and go, okay, that is choppy. And that's about 2 hours. So I'm going to wait until it breaks above, and that way I'll go long, or breaks below, and I'm going to go short. Literally, just make it simple. Simple. Doesn't mean every trade's going to work. No, but if you manage your risk and you go, okay, inventory accumulation, 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 distribution at a discount, or distribution at a profit. All right. So that's it for me. Any last words, Mo? Thank you so much for joining with me. I'm so sorry about the whatevers. I'm such a technical knucklehead, but we'll figure it out. Now I can't hear you. That's so weird.
Last week.
Okay, gotcha.
Yeah. Last week we couldn't show up. So this week we have a little bit
Baby
of
steps.
so next time it will be better.
You're so encouraging all the time, Mo. That's why we love you here on Topstep. You're just always
Thank you.
encouraging. It's great getting to spend time with you.
I would answer a question from Oscar, I think, this last one, quickly. How do you think it should be the alignment between the time frame and the risk willing to accept, which could give a positive expectancy? Don't think about positive expectancy, think about managing risk.
Yes.
So risk willing to accept is the most important thing.
Perfect answer. Perfect answer. Because positive expectancy implies duration of exactness of process over a period of time. The first thing you have to do is start really making that process work, and you do that managing the risk. The way you manage your risk is by looking at the size of the candlesticks around you, right? If you can't handle the risk of candlestick bottom to candlestick top, your size is too big, or you're just trading in a space that you just can't afford to. It's as simple as that. It truly is as simple as that.
Yep.
All right. Great. We did it. Baby steps, getting better every single time. I appreciate you guys having patience with me. You guys know I'm the little girl in the short bus, the little short yellow bus from school. So I appreciate you all. And you know what? We'll get after it this week. Watch your risk. It is going to be messy over the next few days. We'll see how it goes, but let's get our mugs and get ready for Dakota.
I would apologize for the echo, but echo that I'm repeating myself so you can learn. Okay?
All right, everybody. Thanks so much, and we will see you soon. Thank you, Andrew. Thank you,
Like,
Danielle.
please.
Yes.